Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello friends, of late you're hearing a lot of worrying news that the US dollar index is at a 2-decade high. The USD INR is at a lifetime high, which means the Indian rupee is at a lifetime low against the dollar. And many of us are worried about what impact it will have on our portfolio because India is a net importing nation and what the RBI or the central government of India is going to do to ease the situation. Well, on Wednesday, the 6th of July 2022, the government of India has made 4 announcements, and how they're going to impact you and how it will help is something that this video is all about. I'm Vijay Bhambhwani. I've been trading these markets for 36 years now, and through my videos, I want to help my viewers, my online family, to make better informed decisions and get higher return on investment on their trades and their delivery portfolios. So the 4 announcements that the RBI has made, I'm going to dissect for you in my 360-degree worldview manner, and I want you to understand the when, where, why, how of the entire policy. Now, you all know that I'm a big believer in fixed income, and I have also in the past told you that the government of India will be dependent on the inflows of FPIs or foreign portfolio investors in the debt market. And this is a very big market. I have been opining on my social media accounts that there are going to be some very big changes expected in the fixed deposit route of NRI inflows. And sure enough, the government of India has announced some reforms here or some policies here. Now, all incremental, which means new fixed deposits from FCNR, foreign currency non-resident, FCNR-B and NRE deposits mobilized between 1st of July 2022 to 4th of November 2022 will not be included in the net NDTL, which is the net demand time liabilities. And this is for CRR, which is the cash reserve ratio, and SLR purpose calculation. Now allow me to explain. When you and I put a fixed deposit or place a fixed deposit in a bank, that is a loan in the books of the bank. So the bank owes us this money. It will show up as a loan in the bank's NDTL, net demand and time liabilities. So as on so and so date, if you put in a deposit for say 5 years, as on so and so date after 5 years, the bank owes you and me so much money. So in short, when the bank has to make a provision for making good this payment, it keeps a certain amount of this money as cash reserve ratio and statutory liquidity ratio with the RBI. Now for all incremental or new FCNR-B and non-resident foreign currency deposits made between 1st of July 2022 to 4th of November 2022, the banks will not have to provide for CRR and SLR because this will not be included in the NDTL or net demand and time liabilities. The second thing that the government has done, all new deposits mobilized by the banks between 7th of July. Remember, this policy announcement has come after banking hours on 6th of July. So effective date 7th of July 2022 to the last date 31st of October 2022, the banks are freed from the cap or the limitation on the interest rate that it is offering to NRIs. What does it actually mean? It means nothing else but the banks can offer a higher rate of interest to the NRIs so as to encourage them to bring money into the country. Now, this, if the NRIs bite the bait, can bring in substantial amount of money. But I'm coming to that in a bit. Announcement number 3. Earlier, 5, 10 and 30-year tenure bonds or securities issued by the RBI were to be deemed as specified securities under the fully accessible route or FAR, which was open to the FPIs, which is foreign portfolio investors, for investing in the Indian bond market. Now that list has been expanded to 7 years, 14 years bonds, and the current series of bonds which are traded, which is 7.10% interest bearing GS2029, which is government securities expiring or redeemable in 2029, as also the 7.54% GS2036, which is government securities being redeemed in 2036. Okay, so what you're basically telling the FIIs or the FPIs is, look, earlier you could come into our shop, but we would allow you to buy only XYZ product. Now you're telling them you can come into the shop and you can buy as many products from different categories as you want. So you're potentially opening the door to further dollar inflows through the debt market. There's more. Now, what is happening was, currently, if an FII bought in $100 and invested that in the GSEC market, which is the government securities market, they could invest 30% of that, which is $30, in the private corporate debt market, where the interest rate is higher because these are non-sovereign guaranteed bonds and therefore the risk perception is higher. But the government said for every 100 rupees that you invest in government securities, you can only invest 30 rupees in corporate debt. Now that limit is off. Till when? Till 31st October 2022. Alright. The fourth major announcement was, presently AD Cat 1, which is authorized dealer category 1. Now these are dealers who are allowed to trade in foreign exchange in any current country's currency. Typically speaking, all nationalized banks at incorporation itself are given a AD Cat 1 certificate, which is authorized dealer category 1 certificate. Now Cat 1 gives you the highest flexibility of doing foreign exchange transactions. Do remember that the Indian currency is not fully convertible and therefore there are government checks and balances and permissions required to deal in foreign exchange. So the authorized dealer category 1 participants could undertake overseas foreign currency borrowing or OFCB up to 100% of their tier 1 capital or US dollar 10 million, whichever is higher. Now these funds could not just be used for anything that the banks felt like. For example, the bank could not give me that money as a loan for investing in stocks or buying a house or buying an automobile. All right. This money was purely to be used for lending in foreign exchange to export-oriented units, exporters. Now, from July onwards, the AD Cat 1, the authorized dealers category 1, can disperse these foreign exchange loans, which they have basically garnered from the overseas market, to a wider set of sectors, not just exporters, but they still cannot lend to the negative list which is clearly demarcating as a banned list to whom foreign exchange loans cannot be made. So all industries which are in the negative list as per the ECB norms, which is external commercial borrowing norms, will not be able to get these forex loans, but everyone else can hypothetically be given these foreign exchange loans. Now this will help sectors, particularly the small and medium sector industries, which were unable to basically access foreign exchange, or so it is hoped. Now, can this induce a bull market in the country? I'm talking of the stock market. Hey, we don't know yet. Why? Then what use is the 360-degree worldview? Because there is a variable here that you and I don't have any control. And that is, we are opening up the doors to our shop and saying, okay, come here and buy as much as you want. We want the guys coming into the shops and buy themselves. We cannot put a gun to their head and say, you must buy X amount of goods from my shop or I will not let you go. So much depends on how much money is brought in from the NRI route, how much money comes in from the overseas foreign currency borrowing or OFCB route, and how much the FIIs and FPIs investing in the GSEC market. This is something that we have completely no control over. So just as you are, I'm also going to be watching and keeping my ears to the ground and seeing how much of dollar inflows are coming in through this route. As I have been mentioning on my social media accounts, I have been expecting this route to be opened up because this is precisely what we did in the past on many occasions. I have a feeling, now I'm conjecturing, I have no concrete evidence of what I'm saying. I'm merely conjecturing that this is just a work in progress. This is the first amongst many steps that might be taken in the future. What else could be done? It could be a simple thing that the period which is currently till 31st October might just be extended. Like in the past, you could even give them tax ops on the income earned on all deposits made between XYZ date to ABC date. So tax shelters could also be given. Maybe the interest rate could be sweetened further. We don't know. It will all depend on how much of the expectations or how much of the targeted amount is garnered by the government. So as we go along, I think you're going to get more and more announcements. But do I think this is a positive mood? I think yes, it is a positive mood. But like I said, we don't know yet as to how much money is going to come. As for the stock market, I have seen a rally on Thursday, which is the 7th on July 2022. The initial reaction seems to be, hey, we are happy with this. But like I said, early days yet, let's see how much of money actually comes in. On this optimistic note, I'll bid goodbye to you, not before reminding you to click like on this video if you liked what you saw. Subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. Good, bad or ugly, I'd love to hear from you in the comment section. And help me reach out to smart investors like yourselves by referring my videos to your friends and family. Thank you for your patience in being with me in this video. Till we meet again in my next. This is Vijay Bhambhwani signing off for now. I wish you have a very, very profitable day ahead. Bye-bye.